Moving right on, the markets might be lackluster, but there's one stock that's gaining quite smartly in trade, and that's Muthoot Finance. They delivered their Q3 report card as well. Let's touch base with George Alexander Muthoot, the MD of Muthoot Finance. Thank you so much, George, for touching base this morning. Q3 has proved to be a good quarter with several achievements for the company coming in. Can you tell us what exactly were the key highlights or the key factors that aided your stellar performance?
Yeah, we have been able to do a milestone growth of 50,000 crores in gold loan AUM. It's the first time we are reaching the 50,000 mark. That's really a landmark achievement, and we are really proud of it. And secondly, our profit has also gone well. Growth is there in Q2, Q3, etc. And Q4 also we expect good growth. So the factors which are there are actually, we are now, our presence is there, the public perception is good, the demand for gold loans are good, and we have a good, strong customer base who are coming back to us again and again, repeat customers for gold loan. That is our strong, that is the basis on which we feel that we were able to achieve this good growth in this quarter. And surely continuing also, it should be like that.
You've also seen a 32% growth in gold loan AUM. How do you see AUM growth shaping up from these levels as per earlier guidance? Can we expect a 15% sustainable growth from the company?
So if you take for this particular year, from March to today, we have already grown by 22%. That's more than a 10,000 crore of actual growth we have already achieved in this first three quarters itself. So we had given a guidance of 15% or probably better in this year. So since you have already achieved the 22%, we expect this year we should end up by 25 to 26% growth for the full year. That is for Krit's year. And going forward, Muthoot has always been giving conservative guidance. So we will surely say that going forward also in the years to come, we should grow at least by 15% every year. Please mind you, this is all on an increased base. So 15% every year is something which we will be trying to achieve. And as usual, if things are good, if things are okay, the market is okay, the environment is okay, then we should see more than 15% also. But 15% is what we would like to give a guidance for the coming years.
Right, so hi, this is Varun Hirimath also joining into the conversation. What's the outlook on asset quality on a sequential basis, and where are they trending, and the total provisioning that you currently have on the books, where does it stand?
See, if you look at the gold finance company, gold loan department, 90% today of our assets are on gold loan. So today we have 50,000 crores of gold loan and probably only 5,000 to 6,000 crores of other businesses. So in the gold loan section, there is actually no NPAs or no asset quality issues at all. Because whatever you see as a stage 3 asset also, which is about 1.5% in the books, that is just loans which have crossed the threshold time limit only. But we have the gold with us and we don't expect a credit loss there. So actually the provisioning, etc., which we give is only for regulatory purposes. In fact, actually we have never had to use any of these provisions for maintaining the quality. The quality is already there, and if there are any issues with probably spurious gold or stolen gold, etc., that is written off in the current quarters itself. So what you see in the books, there is no need of any provision, but statutorily we are asked to keep provisions, and that's why we are keeping. That's a 1.5% provision.
Right, so then what is your credit cost guidance for the rest of this year? And is there a case possibly for margins to expand from here on out?
Yeah, our credit costs over the years have been about 10 crores to 15 crores to 20 crores every year, which is considering our total income. It is only about 0.3 or the AUM, which is less than 0.03% of our total assets. So the credit cost is negligible every year. We expect to continue with that going forward also. As far as the margins are concerned, we would like to keep a spread of about 10% in our books. So if we would like to keep that spread on the interest we collect and the interest we pay. So that is what we would like to continue. If the the cost of borrowing comes down, we will definitely pass on that benefit to the customers, keeping our interest spread intact.
Okay. Right, so and just a couple last few follow-up questions from us today. What is the growth outlook for your non-gold businesses? I think we've understood gold quite well, but what about the other segments?
See, non-gold business a year back constituted about 13% of our total book. Today it is less than 10%. In the last 1 year, we have been having only a calibrated growth in the non-gold loan business, especially the housing finance, the affordable housing, as well as the vehicle finance. Actually, these two businesses have reduced their AUMs because collections are coming, and the new loans we are calibrated growth only is there in the new loans. So that portfolio has come down a bit, but the microfinance portfolio is doing well. It has about 2,800 crores of portfolio, and it is doing very well. They are back to normal, and their collection efficiency, new lending, etc., is on track. Whether the gold loan, the vehicle finance portfolio is just 420 crores, and the affordable housing portfolio is only 1,800 crores. Those two sectors, we are not aggressively doing it now. But having said that, I'm definitely sure that it is not only the gold loan business which can survive in the days to come. There is always space, there is always need for vehicle finances, there is always need for affordable finances, but the market needs to settle.
All right. What is the incremental LTV on gold loans given the increased competition that you're seeing from banks and other financial companies?
No, actually, our LTV is capped at 75%. Even though it is capped at 75%, not all customers take 75%. Even on a day-to-day basis, it is fixed on the daily market rate. Not everybody takes 75%. The average disposal on a day is only about 69 to 70%. That means that all customers don't take 75%. Some take 60, some take 65. But majority of customers would like to take more of the 75%. We wouldn't want to increase that from 75. Of course, regulatory also it is not possible. And we, from our side also, we wouldn't want to do it more than 75%. Then you asked about competition. Competition is now, there is competition from banks, etc. Banks are doing this business. They are also getting business. Some of the banks have shown good growth. But what I say is, Muthoot has also grown well. We have actually done better than last few years. That means the customers, it is not that somebody else is taking away our customers. Our customers definitely are coming to us. We are also getting new customers. But a new set of customers are going to banks. The banks, the big banks, the nationalized banks, the public sector banks, the private sector banks, all these banks are also doing this. So customers are now looking at this option also as a source of finance. And that is why new customers definitely are going to banks. In short, the market is increasing.
Okay. Mr. Muthoot, thank you so much for joining us then and speaking to us about a host of developments that took place, the key trends that are emerging and the way forward for Muthoot Finance.